Hello people, you're welcome to our YouTube channel. Today I want to share with you 6 things you should look out for before you get into any trade. 6 things you should look out for. 6 things you should look out for before you get into any trade, and we can call these things confluences. Okay, 6 things you should look out for, 6 confluences that you should look out for before you get into any forex trade. Now, as you are aware, professional forex traders follow a set of rules. Professional forex traders follow a set of rules that govern or direct them in taking trades. All right, they follow a set of rules. Professional forex trading is a rule-based trading. Okay, so we don't just trade because we don't just get into a buy trade because we see a buy candle, and we don't just get into a sell trade because we see a sell candle. All right, so in order for you to become profitable and professional in your trading, you need to follow a set of rules, and you need to imbibe the attitude, or you need to imbibe the attitude of rule-based trading, right? Rule-based trading, and that brings about discipline. Okay, when you follow a rule-based system of trading, you have discipline. Okay, you have discipline, and this discipline helps you to eliminate bad trading. It helps you to eliminate bad trading. So this is very, very important. So when you are a disciplined trader, you wait for your setups. You wait for your setup. Wait for your setups. Now, as you are aware, professional trading has to do with waiting. It has to do with waiting. Is about to me, it is about 90% waiting for your setups, and about 10% trading or execution. Okay, or execution. Okay, execution, pressing the buy button and or the sell button. All right, so that is why it is very, very important. And there's something also you need to know. There are two types of losses. Okay, two types of losses in trading. The first loss is a loss that occurred where you followed your rules. Okay, rule based loss and a reckless loss. Okay, so this first loss is a loss that whereby you followed all your rules, your trading rules, and you still had a loss. Okay, you followed all your trading rules, all the checks you take, you ensure all your checks that you do before you take a trade, you followed all checks, you crossed all T's and dotted all I's, and you still had a loss, an inevitable loss. So this loss is a good loss. Why this loss is a loss that happened because you broke rules. You broke your rules. You broke your rule. Okay, you broke your rule. You didn't follow your rule, and this is a reckless loss. All right, so you should avoid reckless losses, and for rule-based loss is inevitable. So once in a while you have a loss because we don't have total control over the market. All right, so but for a reckless loss is something you should avoid, whereby you broke rule, you didn't wait for price to come to your zone, or you didn't do other checks. So this can cause reckless loss. So today I want to share with you, as I said, 6 things. I want to share with you 6 things that you should look out for. 6 things that you should look out for before you take any trade. So before I share these 6 things, I want to ask that you please kindly subscribe. To our channel. Okay, kindly turn on the notification bell. And Also like our videos. Why you have to turn on the notification bell? So that you can be alerted when I upload new videos. You feel be the first to know. Also like our video, give it a thumbs up, and also share our videos with your friends so that more people will be aware and learn from our contents, our business and investment contents that we make. All right, it takes time to make these contents. I give my time and best shots, but so that more people will learn. And also, if you want to join our Telegram channel, the link to our Telegram channel is in the description box. Of this video. In our Telegram channel, I actually share daily. I share chart analysis that you can actually trade at your own discretion. So let us get straight into the topic of today. So as I said, we have 6 things you should need to check out for. Number 1 is you need to identify, before you take a trade, you need to identify. Let's have a clean sheet. So the first things you should look out for before taking a trade, you need to identify market structure. Okay, the forex market moves in structures. All right, I've made a separate video previously on market structure. So market structure is very key. You need to understand market structure if you really want to be on a positive side of the market. If you want to have an edge in the market, you need to have a good understanding of market structure. And when we measure market structure, you need to start looking at the higher time frame. Before you take a trade on lower time frame, you need to look at the higher time frame. Where are you on the market? Where is your chart? Where is the forex pair that you want to take, or the instrument you want to trade at that particular time? What is it doing in the higher time frame? Is it on a bullish market phase? Is it a bullish market phase on a bearish market phase? Now, market structure is divided into 3. Market structure is divided into, you have number 1, you have a bullish market structure. You have a bullish market structure. You have a bearish market structure, and you have a market structure in a consolidation phase. Consolidation phase. So these are the three phases a market can actually be. All right. So in a bullish market structure, the market is making higher highs and higher lows. Okay. Market is making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher low. All right. And so the market is in a bullish phase. Market is moving straight. The market does not move in a straight line. So the market is in a bullish phase. So in a bullish market structure, you only look for buy trades. All right. You only look for what? For buy trade in a bullish market structure. Now, we also have a second market structure is in a bearish market structure, whereby the market is making lower lows and lower highs. Like this, the market is making lower lows and lower highs. This is a lower low, lower high, lower low, lower high, lower low, lower high, lower low and lower high, and so forth and so on. Lower lows and lower high. So in a bearish market structure, the market is in a down phase, selling down. So all you just need to do is to look for a good entry point. The market is selling down. All right. So now the third phase the market can be before I get into a third phase, in a bearish market structure, you are looking for a sell trade. All right, you are looking for a sell trade. If you in a bullish market structure, if you are looking for a sell trade here, you are counter trading, and this is dangerous. In a bearish market structure, if you are looking for a buy trade, it is counter trading, and this is dangerous. All right, so the trend is your friend. All right, the trend is your what? The trend is your friend when it comes to forex trading. The trend is your friend. This is very, very important. Do not counter trade. Counter trading is dangerous. Counter trading is dangerous because you are just as if you want to go against the moving train. You want to stand on the way of a moving train, or you want to catch a falling knife. Counter trading is like trying to catch a falling knife, which is very, very dangerous. You need to move with the tide in trading. Move with the tide. It's safer to move with the tide in trading. So the third phase in the market is a consolidation phase, where the market is in a consolidation phase like this. The market is not moving in in a bullish or bearish structure phase. It's just in a consolidation phase, and it is advised, except you're a trader that trades support and resistance. If you trade support and resistance, a consolidation market might be for you. But if you are not a support and resistance trader, a market that is in a consolidation phase, you avoid it. You just sit on your hands. There's nothing to do. You just sit on your hands. And it has been proven that most losses in the forex market happen when the market is in a consolidation phase. Most losses happen when the market is in a what? Is in a consolidation phase. Most losses that traders encounter happen because they traded in a consolidation phase. So that is why you need to identify, you need to avoid trading the consolidation phase of a market. So the second thing you need to do is to identify, before taking a trade, the second thing you need to do is to identify structural break of structure. Okay, a structural break. Okay, a structural break, or we call it break of structure, BOS. Okay, you identify a structural break, which is BOS. What does this mean? It means that for a bullish example now, like this. Okay, so this is a break of structure to the upside. This is a break of structure to the upside. This is a break of structure to the upside. Okay, so for here now, if you need to identify this break of structure, now you need to identify the break of structure. With this break, this structure have been broken. You need to identify it. This point that has been broken. This point have been broken. This point have been broken. This is a higher high. Take this high. This is 1, 2, 3. This number 2 high took out number 1 high. Number 3 high took out number 2 high. In a bearish phase, this is a low. All right, this is low number 1, low number 2, low number 3. This low took out low number 2. Low number 2 took out low number 1, and low number 3 took out low number 2. Just identify this. All right, you need to identify this takeout. Okay, this structural break. Okay, it's called a structural break or a break of structure. All right, I will show you the point number 3 will show you what you need it for. I'm going to show you what you need this break of structure for. But first of all, you need to identify a break of structure. Number 3 thing you need to do after you have identified a break of structure is you now trace to identify the zone. Identify the zone. When I say zone, I mean either supply zone or demand zone. Okay, a zone can either be supply or demand zone. This is not a new thing to you. This channel is about trading supply and demand zone, and also when it comes to forex and also smart money trading. So you identify the zone that triggered the break of structure, that triggered the BOS. Okay, so you need to identify the zone that triggered the break of structure. I'm gonna demonstrate it for you right now. Now, in point number 2, we said you look for a low like this, a break of structure like this. Okay, so this is this low taken out. All right, we said you need to identify this low was taken out. This low was taken out. So this zone right here, this is the supply zone right here. This is the zone that triggered this break of structure. All right, here now, this is the zone here that triggered this is the last zone that triggered this break of structure. So that is to say, if I have something like this, okay, if I have a market like this zone have been taken out. The market was creating lower lows and lower highs. This zone was taken out by this low was taken out by this zone. All right, so I will now identify this zone that took out this last low. So this will now be my POI, called point of interest. This will now be my bearish point of interest. So this is where I'll be waiting for price to come back to here, because this is the zone that took out this low. All right, this is the zone. This is the zone that took out. This is the supply zone that took out this low. So I will now be waiting for price. I will now be waiting for price to come back to this point. So this is not point number 3. It says identify this zone. Identify the zone that took out this that caused the break of structure. This is for the bearish phase. Let's look at the bullish phase. The bullish phase will appear like this. All right, like this. So this is break of structure. This is the last zone, the last high that was taken out. So I'm going to look at identify this zone. Identify this zone. This is the demand zone that took out this high. Okay, this is my bullish point of interest. Okay, this becomes my what? Bullish point of interest. This is number 3. So number 4, the fourth thing I need to do, number 4, is to wait. Wait for price. Wait for price. Wait for price. For price to come to POI. To POI, which is point of interest. You need to wait for price to come to the POI. And this POI, we said, is either a supply or a demand zone. Okay, wait for price to come to our point of interest, and that point of interest is our supply or demand zone. All right, so let us demonstrate it right here now. So previously in the bullish phase, we said price moved in this form, price moved in this fashion, and this low, this last low was taken out. So by this buy. So I'm gonna, this is the zone that took out, this is the zone, the demand zone that took out this high. So I'm going to wait. The fourth point says you need to wait for price to come to this zone. All right, price will now come to this zone. So I'm going to wait for price to come to this zone. If you're in my free Telegram channel, you see that I post. I will post I will post something like this. This zone is where we're going to be looking for. I'll post a chart indicating a zone that we are looking out for. Okay, we are waiting for price to do what? To come to, and from there we take our trade. So this is the zone. We're going to wait for price. Fourth point, 4 things to check out, to look out for, is to wait for price to come to our zone. In this case is a bullish phase. So let us show a bearish example of that. A bearish example is like this. So we need to, this is our last high low that was taken out. So, and this is the last low taken out. So this is our point of interest zone or a supply zone. So we're going to wait for price to come to our point of interest before we can take our trade, our sell trade from that point. So that is number 4. All right, so this is number 4. So number 5, the fourth thing you need to do is to, when price have now come to that point of interest, which is your supply or demand zone, price have now come to that point of interest. In the case of a demand zone, a supply zone, price have come to our point of interest, which is here. So we wait for what is called a change of character. I've made a video on change of character, understanding change of character, break of structure, and the likes. I'm going to link that video in the description box of this video. All right, so you need to wait for what is called here. You need to look out for a change of character here. All right, change of character. And change of character, I've explained this in a video, in a separate video, extensively. I've explained this change of character extensively. You need to understand change of character. Change of character actually has to do with a flip. Okay, it has to do with what is called flip. Flip is actually a change from a bullish phase to a bearish phase, or a change from a bearish phase to a bullish phase. That is a change of character. Market was actually in a bullish phase buying, and that we look for a sign that is in this on this zone, we look for a sign that shows that the market is about to sell, or so that we don't get into the sell trade and the market continues to buy. All right, so that is why we need to look out for a change of character. Change of character is a change of phase from a buying bullish phase to a bearish phase, because here the market was actually buying up. So it bought up to the zone from where we want to take a reversal trade. So before we take a reversal trade, we need to look for a sign that shows that the market is about to sell. Else, we could get into a sell trade here and the market continues to buy and hit our stop loss. So that is why we need to look for a change of character. Okay, and that change of character happens on a lower time frame. Okay, let me indicate what that means now. The change of character happens in a lower time frame. This is what happens actually. You have a zone like this. You have a zone like this, which is your okay, let's make it clearer. Okay, we have a zone like this, this is our supply zone. So a change of character has to, you get into the market, the price comes to our zone. Okay, and so what we are looking for is a break of structure, a break of structure, a change of character. We need to have a structural break, a mini structural break on a lower time frame. Okay, a mini structural break. If let me draw it a clearer way so you can actually understand. Okay, so what we are looking for, the market is actually creating higher highs and higher lows, into the zone. So when the market comes to this zone, you need to wait for market to break a structure. All right, this is the market. This candle broke this structure. So when this is broken, we have got what is called a change of character. Okay, a change of character. So the market was actually buying up, so but it has broken structure, broken one of it was creating higher highs and higher lows, but now it broke a low. Okay, it broke a low, showing that market is going to do what? Sell. So now this was for a bullish phase, right? This is actually for a bullish phase. Now for a bearish phase, we have the market. This was for a bullish phase. For a bearish phase, we have something like this. Okay, we have something like this. Now, something like this. Now this is our zone. So we wait. The market will be creating lower lows and lower highs as it comes to the zone. So when it comes to that zone, we want to have a structural break, which is called a bullish change of character. So once this structure has been broken, so this is one of the signs. This is our fifth point, which says we need to wait for a change of character. So after we have seen a change of character, the next thing we need to do is to wait for a return to order block. Okay, we need to wait for what? A return to order block. And in this case now, this is the sixth thing we need to do, is to wait for a return to order block. And the return to order block has to do in this bullish phase now. Now the structure has been broken here, to wait for price to come to the zone that broke that structure on a lower time frame, and from there we take our trade to the upside, and our stop loss will be just right below here. Our entry will be somewhere around here, and we'll make our profit. Now for a bearish phase, we are having a market structure of this fashion. All right, and now we have the market creating lower lows and lower highs, and came right here, broke structure, and now we're gonna look for a return to order block. Okay, return to order block means getting mark price coming back to the order block that actually triggered this change of character. So and from there we take our trade to the upside. All right, this for a bullish phase, and I've shown you for a bearish phase that you need to wait for a break of structure to the downside, which I said was something like this. Okay, and I said you need to wait for price to come to that structure and break structure, return to order block. Sorry, let me draw it in a very clearer fashion. Okay, I said it's going to be Okay, this is actually a buy. So let's make it in a let's do a sell, so it appears in this fashion. All right, so we wait for market to come up, break structure, return to order block, and sell. So I've made separate videos on this. Okay, I've made separate videos on this, on how to refine your entries, and also I've made a video on change of character, break of structure, and the rest of that. So understanding these keys will actually improve your trading. It will actually improve your trading. So let us recap. The first thing I said, six things you need to look out for. 6 things you should look out for while taking a trade. Number 1, I said identify market structure. And when I say market structure, I said either bullish market structure, bearish market structure, or a counter trade. Sorry, bullish market structure, bearish market structure, or a consolidation market structure. Number 2, I said you need to identify a break of structure. Number 3, I said you need to identify the zone that triggered the break of structure. That zone. Okay, you need to identify the zone or point of interest, zone that triggered the break of structure, or that caused the break of structure, and which is called the demand zone or the supply zone. All right, so number 4, I said we need to wait for price to come to our point of interest, or wait for price to come to our point of interest. You need to wait, okay, for price to come to our what? To our point of interest. Okay, you need to wait for price to come to our point of interest. And number five, I said we need to wait for what is called the change of character. And number 6, I said you need to wait for a return to order block. So these are the 6 things you need to do, you need to look out for before you take any trade. If you follow these 6 things, if you follow these 6 steps and you have a loss, then you have done the right thing, you have done your part. If you follow these 6 steps, you would hardly have a loss. But losses, as you know, are inevitable in forex trading. So, but if you have a loss, you have what is called a good loss. You have a good loss. You have a good loss. Okay, if you take these 6 steps I've shown you, all right, if you take these 6 steps I've shown you, like for example now, you can actually see that the market here was in a bearish market structure. This is a bearish market structure. Okay, market was creating higher lower lows and lower high, lower low, lower high, lower low, lower high, lower low, lower high, and so forth and so on. All right, so this is a potential trade position. This is a potential trade position. This is a potential trade position, and you can see that the market respected it. All right, that is just what I just explained. The market respected. So on a lower time frame, you look for a change of character here. Lower time frame, you look for a change of character here. Okay, and so forth. Even here, you look for a change of character. Why you need to look for a change of character? 2 reasons. Number 1, to increase your probability of success. So increase your probability of success. Number 2, to increase your risk to reward ratio. You have a higher risk to reward ratio when you look for a change of character and break of structure and a return to order block. You have a higher risk to reward ratio. These are two reasons why you need to look for those 2. So now for a bearish phase, let's see if we can identify a bearish phase. Okay, this is also like a bearish phase. A bullish phase. So the market was creating higher highs and higher low. Higher high. This is a complex bullish market structure. It's not a Facebook. Not Facebook. This is not a textbook. An example. Textbook example. All right. So you can see this. Let's see if we can see another. This is a bearish market structure. bearish market structure. All right, so you just go through your chart, you're going to see them. All right, you should need to know how to identify these. You need to know how to identify these, and it will really help you. It will really help you to increase your win rate while trading the forex market. So I think we'll be ending this video right here. I don't want to make it too long. More contents are coming your way, more useful contents are coming your way. All right, I don't just give you contents for giving, so I give you content that will help you, benefit you, and make you to be a better trader. All right, so please kindly subscribe to our channel if you are yet to do so. Please subscribe to our channel. Please subscribe to our channel and give this video a thumbs up. Okay, like the video, please give it a thumbs up, and also share our videos with your friends so that the YouTube algorithm will favor it, and so that more people can benefit from our contents. And if you want me to mentor you personally on forex trading, as I always tell you, I don't believe in collective mentorship. I believe in private mentorship. You want me to mentor you one-on-one on how to become a profitable and successful forex trader, do contact me, and my contact is in the description box, is in the Telegram channel, and the Telegram channel link is in the description box of this video. So when you contact me, we're gonna fix how we're gonna train you at your own pace. We're going to take you by the hand until you become a profitable forex trader, step by step, gradually, from ABCD of forex trading even to a complex stage of forex trading. You're going to become a better trader. Even if you're a struggling trader, you want to learn from me personally, I'm going to mentor you and take you by the hand until you become a profitable forex trader. So till I come your way next time, I want to wish you all the best in your trading. Do have a lovely day ahead.